Crypto markets turn aggressively south after hitting new highs last week. On-chain metrics remain constructive, but with everyone anticipating a year-end rally, the pain trade seems to be lower. And implied vols stay stubbornly expensive, suggesting dealers are limit short volatility, which may exacerbate moves into year-end. All this and more in this week's Crypto Insight. Okay, so crypto this week. After hitting new all-time highs last week, we can see the wick of this bar here, nearly 69,000. And in Ethereum, we also hit new all-time highs at around 4,900. Obviously, we are well and truly back in correction mode. In terms of news flow, probably the biggest catalyst for the pullback was the SEC rejecting the Bitcoin spot ETF, which wasn't a major surprise to markets, but obviously it wasn't an incrementally good piece of news that maybe the market was hoping for. But, you had a few other things going on. You had Apple's CEO admitting that he's got a load of personal crypto holdings, but kind of alluding that he's not going to go and buy it for Apple's balance sheet. Institutional adoption does seem to be accelerating in general from just sort of anecdotal things. And you've got the Twitter CEO saying he's got big plans to build DeFi on Bitcoin, which is a bit of a new one. But and that's because this Taproot upgrade, right? So there's been this big upgrade that got activated over the weekend on Bitcoin. It's called the Taproot upgrade. It's the most significant change in the Bitcoin protocol since 2017. What does it do? Well, it boosts Bitcoin's smart contract functionality, potentially broadening its use cases. Okay, so that's been one of the big things why people have preferred Ethereum to Bitcoin, the whole smart contracts. Well, apparently Bitcoin might be evolving. Okay, and that's the great thing about crypto in general. It's all evolving all the time, right? It's not just sitting still like gold has for the last 5,000 years, right? So that's one thing to bear in mind. It increases privacy by obscuring what types of transactions are being executed. Bitcoin transactions will become more data efficient, which could optimize block capacity and lead to lower transaction fees. And it makes transactions on the Lightning Network more flexible and more private, which should boost Bitcoin adoption. Okay. Now the market probably anticipated this as a bullish catalyst. So it's been on the radar for a while. So again, let's be honest, anyone in the crypto space that is probably looking for a year-end rally, okay? So what do you think the pain trade is in crypto? It's probably not higher, is it, right? So I'm not saying we're not going higher, but it shouldn't have been a massive surprise that a correction could happen because the whole world and their dog wants this thing higher, right? And is already positioned for that year-end seasonality, okay? So now looking at the Bitcoin chart, if this sort of last leg down, which is quite a violent leg down, is the C wave in a fourth wave correction, that's good news. And the main really support zones I'd be looking for it to hold would be 54K and 58K. Okay. So it's kind of almost touched into that 58K area today, but often the C wave, which is the third part of a three-wave correction, often the C wave is the one with the most sting on it, basically, right? It's the sharpest one. And, I think that does kind of look or satisfy the definition of the 69 down to 59 in the matter of a week. It's fairly sharp. Could it extend a bit? Yeah. I'd probably feel quite good about buying it in that 54, 55K area if it managed to get there this week. So that's what's on my radar. I haven't bought any more exposure down here yet. I'm kind of waiting. And if you look at the momentum indicator is, not quite as low as it has been. So, what I'd really like to see is over the course of this week, the momentum indicator kind of finds a base above that low made at the end of October. The price maybe touches into that support zone. So we find a lower price, we find momentum not as low, we get bullish momentum divergence, and we've got a nice foundation to rally off that into year end, right? And the target kind of remains, for me, sensible target around 80K by year end. I think still quite realistic. The outlandish targets of 120, 150, 200, whatever people are throwing around, I don't personally buy into that right now. Yeah, things would have to change quite significantly for me to think those targets are realistic. Yeah. So that's where I am on Bitcoin on the chart. If we look at Ethereum, pretty violent pullback. It has just managed to tick and touch that first support of 4,100 today. It's got some more at 39 and 36.50 in terms of Fibonacci confluence zones that I managed to pick out. But, you know, it's had a great run. It's kind of been in need of a correction. You know, it hasn't really done an ABC. I wouldn't say. It's harder to kind of identify the ABC that Bitcoin has because it's been outperforming. But, you know, we'll see. They're kind of moving in lockstep right now. If you look at the cross rate, that's just been kind of flatlining at around this 0.07. So nothing really too sinister going on in Ethereum. But like I say, I think it's just going to track and follow what Bitcoin does to an extent. Right? I don't think it's going to move to its own beat right now. Yeah, you kind of need some more. Maybe if we get some more news out on the Ethereum ETF, that might trigger a bit of kind of outperformance and dislocation from what Bitcoin's doing. But right now, Bitcoin seems to be running things and driving where we're going. Yeah. In terms of on-chain metrics, hodling behavior, recent exchange outflows all continue to remain bullish, suggesting that mainly strong hands have been accumulating. They've been happy to let a bit of exposure go on the rallies as we approach new all-time highs. But given that those are the people who are selling, you know, it's kind of unlikely they're going to start panic selling into a pullback, basically, right? They seem to be more opportunistic sellers as the market rallies. Okay. Funding rates have also been in check, suggesting that the market isn't too stretched in terms of leverage. So I doubt this correction is going to turn too ugly, which is why I think my support levels of 54 to 58 are likely to be held because of where funding rates are and stuff. So I'm going to go out on a limb and say I don't think we're going to get an intraday 20% sell-off in Bitcoin, given the state of play in terms of the funding markets and the amount of leverage that is there. Okay, there have already started to be some liquidations on this latest leg down, but they haven't got too dramatic, basically, which suggests that there's not too much sort of leverage out there. Yeah, so that's kind of what I'm seeing on chain. Nothing too exciting, basically, on that front. Now let's talk about the vol side of things. Okay, so realized vol and an implied vol. If we look at this here. So we've had the volatility cone on the left is showing us, obviously the current is the blue. So pretty much on every time frame up to 6 months, we're seeing it below the 25th percentile in terms of realized volatility. So clearly some pretty low realized across the spectrum in terms of Bitcoin. If we look at the right-hand chart, that's showing us the implied vol, roughly 1 month maturity versus the realized vol 10-day. And you can see a massive gap was building there of about 30 vol points, basically, right? So pretty hefty premium in implied vol because the implied vol just wouldn't come down with the realized. And when that happens, that normally suggests that the street positioning is very short, right? So despite realized working and them all earning decay and loving being short, they're not willing to offer the options at a cheaper price because they're already limit short, right? They can't afford to go even shorter than they already are. So they'd rather just keep the vol at the higher level, collect their money through time decay, but not risk getting taken short even more optionality. So that's why that implied vol stays elevated. It gives you an indication of what the street positioning looks like. Yeah. And that's certainly what we were starting to see in crypto, whereas those implies were staying stubbornly high. And it makes sense, right? Because December expiry is now your next major expiry. And that expiry has been alive for ages. And everyone's been a buyer of calls in that expiry to reflect their bullish view, right? So clearly the street is short that expiry, particularly on the upside, I imagine. So no major surprise that they're holding that implied vol up. Yeah. So that's kind of the implied versus realized picture. If you look at a term structure, then that's been interesting. You had with very low realized last week, you had, the move on the week going from pink to blue, you had an absolute collapse of the super short dated stuff, right? So whilst December, the 1 month to 40-day area was staying quite elevated at around 80 vols, the 1 week stuff, was down at 60 something, right? So you had this kind of cliff edge on the term structure where they just wouldn't let December go, but anything in November, was collapsing because that was really the pure gamma that's realizing now, which is very low. Okay, so that's what you had. But obviously, with the latest puke in spot, which came over the last 24 hours, you've had your, customary pop in term structure that we often see, right? So you can see the 24-hour move in term structure is this, where you had the upward slope and then the front is completely popped, and now you've just got a flat line around 85 to 90. Now, I'd expect that to not persist for very long. My style with these term structure trades, I often sell that front, buy the back to play the reversion of that if I think it makes sense. I haven't done it yet, but when I want to add delta to the market, when I think this sell-off is kind of done over the next few days, if the curve is still like this, the call calendars will be the way to play it, basically, right? So doing some sort of short November 20-30 delta call against buying some sort of December 30-40 delta call to position yourself long a bit of net delta, but taking premium out of the November, expecting that curve to collapse in a rally and owning your December strike behind it. That will be a nice way to play both the direction and the term structure trade at the same time. And, you guys, my subscribers will know those are the type of trades that I like doing to play that. But I just don't think the entry point's quite here yet. Still waiting for a few technical signals to then enter into those type of trades. Yeah. Okay, so that's kind of where we are on term structure. If we then look at skew and what that's been doing, we've got this chart here. So we've got Bitcoin skew has been drifting, so particularly the short dated that's now, about 5 odd vols for puts over. And then all the other skews have been kind of rolling over, and a lot of them have kind of now moved into puts over rather than calls over. Okay, probably only the longest dated 6-month one is still slightly for calls, but anything sub 6 months is kind of showing a slight premium for puts. Okay, so definitely seen that happening over the course of the last week or so. Now, if you look at Ethereum over the course of the last sort of 2 weeks since the end of October, Ethereum skew that was very elevated, particularly in the long end, where we'd seen all that March activity, that has completely collapsed, right? To the point where, March is now nearly for puts. It's only about 5 vols over for calls after hitting 20 vols over. And then the other maturities have now all flipped into the put side, which is pretty dramatic for Ethereum and not something we've seen for a bit, right? If you go back, in September, you had a bit of that going on, but throughout the whole of October you had very, very elevated call skews, and now that's all kind of mean reverted back down again, basically, right? So people's faith in this Ethereum explosion to the upside may be subsiding a little bit there, basically. Okay, and we're also seeing that sort of confirmed in the flows, right? So obviously, and that makes sense, right? If you're seeing that pricing move around, it's probably being driven by some kind of flows. So we're seeing much more balanced flows in terms of the blocks that are going up. So in Bitcoin, the puts to calls is now around 60-40, and generally we're seeing put activity in the shorter maturities like end of Nov, and where else? End of Nov and this week, basically. So 1 to 2 week puts is really where we're seeing a lot of put activity, and the call activity still centered on the upside in the December, January, and March expiries. So in terms of Ethereum block flows that we're seeing, we're getting, obviously still getting the kind of upside flow there in December in that kind of 7,000-8,000, but and even in March, you're seeing kind of 9,000, 10,000 areas. So still seeing a bit of call activity in those longer term Dec and March expiries. But then look over here, we're also seeing a large Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.